All right, guys. Hello. Welcome back to another live stream here with me, Nick, with AccuPlan Benefit Services. Today, we are diving into a topic that's, pretty common, everybody loves to talk about real estate. We're going to get more specific than just real estate. We're talking about real estate inside of a self-directed IRA. It's an incredible way to grow your retirement savings by leveraging one of the most stable and profitable investment vehicles out there, real estate. As usual, we have our resident expert, Ben, here with us. Thank you for being here, Ben. We're glad to have you.
Hey, thanks. I always like talking about real estate. It's one of my favorite topics, and being able to combine that with an IRA, even better. So I'm excited to discuss these options for clients.
Yeah, awesome. Well, I mean, no sense in, having small talk here. Let's just jump right into it. I will say, if any viewers have any questions or are curious about things, shoot us any questions throughout the whole live here. We will respond to those questions. Again, you can ask them at any time, and we'll get to those questions, one specifically at the end. But if we see the questions before and they pertain to what we're talking about at the moment, we'll get to those questions immediately. So let's just jump right in. First, what are we really talking about, Ben, when we talk about real estate using your self-directed IRA? Can you explain the difference between this and maybe just regular real estate investments? What's the difference here?
Yeah, most people that have IRA accounts have an IRA with a Fidelity or a Schwab or an E-Trade, and they're doing stocks, bonds, mutual funds. That's the primary thing that they're doing. That's the primary thing that they know that they can do. They are unaware that they can actually take their retirement funds and invest in real estate inside their IRA. And what we provide for them is the ability to take the retirement funds, get it out of the stock market, get it into real estate. The main difference between real estate, inside of an IRA versus outside of an IRA is if they bought a property in the IRA and they have rental income. All of that rental income is tax deferred. They don't have to pay any taxes on any of the rental income while it's in the IRA. If they decide to sell the property, any gains that are made inside of the real estate through the IRA LLC are all tax deferred as well. So they buy a property for $100,000, they sell it for $200,000. That $100,000 gain, tax deferred. They're renting it out for $1,000 a month, $12,000 a year, all tax deferred. So there's great benefits in having retirement funds, having real estate in a retirement account, because you get that tax deferred benefit.
Okay. That kind of makes me, so I know we talked a little about, you mentioned, regular accounts have stock, bonds, mutual funds, maybe even potentially REITs. But what I wonder for myself is, well, what type of real estate can I purchase? Like you say, we can do this in an IRA, and you get all that tax deferred, income and growth. But what type of real estate can we purchase? Like, is it just, like a REIT? What are we talking about here?
The good thing with the IRS and the rules that the IRS put in place is they did not put a restriction on the type of real estate. They put a restriction on who you can invest with. So we'll get to that in a minute. But
Okay.
most people that invest in real estate invest in just, single family homes or apartment buildings or commercial property or raw land. All
Okay.
of those things can be inside of an IRA account. Most popular for most of our clients is just a single family home where they buy a property and they start renting that out to an individual. But commercial property is allowed. People will call me up and say, can I buy raw land? I think the value of this land is undervalued. I just want to buy raw land. Does it need to earn income? That's another question. If I buy a property, does it have to be property that earns rental income? Which the answer is no. You can be buying a property with the sole intent to see the appreciated value of that land or property.
Okay. So that's cool. I mean, really, we're talking physical assets of real estate, right? Not a paper real estate investment. That's cool. Whether it be, like you said, single family, commercial, all those are on the table as far as what you can invest in here with your retirement account. So that's great. Now you have mentioned that there's plenty of advantages of purchasing the real estate, because we can just go out there and buy a property, not do it through your retirement account. But at the end of the day, you're missing out on all that tax savings, correct? I mean, that's the main benefit of using your IRA is the tax deferred savings that you get with it, right?
Yeah, the big benefits that people, or why they want to invest in real estate, is they want to buy a physical asset. They're concerned with the stock market, was concerned with paper assets, and they want to buy something that they can feel and touch. So that's a big advantage. The other advantage is you get all that tax deferred treatment. So any gains, whether it be in the sale of the property or the rental income, all tax deferred. Another advantage of buying real estate in your IRA, we won't get on this topic very much, but if you're familiar with a 1031 exchange, what a 1031 exchange is if you buy a property outside of an IRA and it has gains, if you want to sell the property and defer those gains, you can do that in a 1031 exchange, but you have to buy a replacement property, and there's a time limit of when you have to buy the property. You have to identify certain properties. With a real estate in an IRA account, you don't need to worry about a 1031 exchange. All of the income, all the gains are tax deferred. You can buy a property, you can sell the property. If you want to buy a second property, great, you can do that. There's no time restriction on when you buy the property. Or if you want to get back into the stock market, you can do that. So you're able to defer the taxes without doing a 1031 exchange, and you're able to stay in real estate or get out of real estate and still get that tax deferred treatment.
Okay, cool. I mean, one thing too that kind of makes me think too with like a 1031 is generally, like you said, there's a time limit, but there's also an end time, right? Like if you decide eventually like, oh, I'm not going to buy another property. Well, now you're still going to be paying taxes. Eventually there's like an end time of paying taxes, right? Uh,
Yeah. And the
so
other,
yeah,
as you
go ahead.
mentioned, when you sell a property, you buy a property for 100,000, you sell it for $200,000. You pay taxes on that $100,000 gains. If you did that in an IRA account, you bought a property for 100,000 and sold it for $200,000, 200,000 goes back into the IRA. You don't have to pay taxes on that $100,000. But then what you can do is you can take distributions throughout your life and only pay a small tax rate. So you're retired, you're 65, you're not getting any income. You can take out $10,000 a year in your IRA and you only pay taxes on the $10,000. If you had it outside of the IRA, the moment you sell the property, you have to pay the entire portion, $100,000, which is probably going to push you up into a higher tax bracket. So you're getting tax deferred treatment in an IRA, but you're also able to take money out slowly over time and keep your tax rate low as well.
Yeah. Okay. So this actually, somebody just popped in a question that actually kind of goes along here with some of these, rules and just different things that are happening. But a question is, don't you have to take mandatory withdrawals from an IRA at a certain age? And how do you do that with a single family home? Good question.
Great.
And it comes
Yeah.
up. Yeah.
Great question. So, with real estate, my general recommendation, real estate is great for the person that's 20 to 65. Because you mentioned RMDs. When you turn 72, you will have to start taking RMDs, required mandatory minimum distributions. And when you have real estate in an IRA account, hopefully you've maybe had the real estate for 10, 15 years and you've got a good cash flow. So maybe you have a $300,000 property, but you've got $50,000 in cash. So you turn 72 and let's say you have to take $5,000 out. Hopefully you have enough cash saved up that you could probably go for 5 or 6 years without having to sell the property. But eventually it's going to come to a point where you turn 75, 76, you have no longer any cash in your IRA, you just have the property. More than likely, you're going to have to sell the property. There are ways we can get a little creative where we can combine an LLC that will allow you to keep the property. That's something that we can discuss more in detail. It gets a little complicated. I don't want to spend 20 minutes discussing that, but there is a possibility of keeping the real estate after 72. But my recommendation is that eventually you're probably going to need to sell the property. And eventually, when you turn 75, 76, you may want to sell the property. You may not want to manage it and deal with renters and deal with fixing it up and things like that. So this does have a shelf life to it where eventually you'll probably want to sell it.
Yeah. Well, and we can kind of move into this next little phase here of questions that I kind of have as well that pertain to the rules. So obviously there's going to be rules, right, when investing with your retirement account. I know that there's prohibited transactions, there's disqualified persons. Those are rules that are common with your retirement account. How do the rules pertain to real estate? And to be a little bit more specific, and one of the kind of questions that I have in my mind is, as well as the income. So let's say you choose to have a single family home that you're renting out, right? What happens with that income? Can you just take it? Like if my rental property is making $4,000 a month, let's say, does that just go into my account? And then great, if there's any, like you said, you might have times where you need to fix things up. How does that all work when we're talking about inside of an IRA?
Good question. There's a couple things. One, the process of setting up an account, it's very easy and simple. You set up an IRA account. You basically go to a link that we send you. You create an account. It takes about 5 minutes. Once the account's set up, you have to request money from your current custodian, which we help. That takes about 1 to 2 weeks to get the money. And then we purchase the property inside the IRA. There is a possibility of doing an IRA LLC, which we'll discuss later, but you purchase the property, whether it's in an IRA or whether it's in an IRA LLC. When you purchase the property, and let's say there's rental income coming in, the rental income would need to go back into your IRA account. So let's say it's $1,000 a month. They would be sending a wire or sending a check or an ACH directly to us as your custodian, and we would deposit that in your IRA. It would be tax deferred at that point. If you combine what's called an IRA LLC, the process with an IRA LLC is, instead of having the IRA purchase the property, we set up an LLC for you. The LLC lists you as the manager, and you go and set up a bank account in the name of the LLC. Once the LLC is set up, you direct your IRA to invest in this LLC account. We wire the funds to the LLC, and then you, as the manager of the LLC, purchase the property in the name of the LLC. All the rental income, all the expenses go in and out of the LLC. You cannot use that rental income for personal use. If there are any expenses that need to be paid, you need to have the IRA pay for those expenses. You cannot pay for them yourself. So the rules that you mentioned briefly is, you cannot invest with family members, which include yourself, your parents, grandchildren, children, and grandparents. What that means is, if you had a parent and you wanted to buy the property from your parent, you could not do that. The other thing to keep in mind is you cannot get a benefit between you and a related party. A related party would be yourself, your parents, your kids. So for example, you bought a property, but then you wanted to rent it to a child. You could not rent it to a child, whether in an IRA or an IRA LLC. The rules are the same.
Okay. So that makes sense. You talked about a product that here at AccuPlan we offer, which is checkbook control. Regardless though, when you have your real estate in an IRA, everything's flowing to, like, as far as all the income, all the expenses, they're flowing to the IRA. So you mentioned specifically, going kind of back to the mandatory withdrawals, hopefully you've had your property for a little while and it's generated this cash flow because each month it's making money. That's all going back to the IRA. So hopefully over the years, you've got, more than a few $1,000s that if you have a mandatory withdrawal, you've got enough cash in there to pay for some of those withdrawals before having to maybe then sell the property. The other thing too is, I know some people are just like, well, I just want to go and if it has repairs, like if I need to get new carpet or something, I can do that myself. Or I can just pay for somebody to do that, and I'll just do it through my own, accounts. I won't worry about doing that with the retirement accounts. It's too much of a hassle. Well, that's not possible, right? That's a disqualified, it's not, you can't do that. It's a prohibited transaction. That's where the checkbook control really shines and comes through because, and you might have said this in just a minute ago, but um, as far as the checkbook control, what would you say that main benefit is? It's really just the fact that you can use it to kind of bypass having to go through the custodian to do all of your directing of of the investments, right?
Yeah, the advantage of the LLC is there's a couple advantages. One, LLCs have asset protection. So having an LLC by itself gives you some privacy, it gives you some asset protection. The other advantage is that you, as the manager of the LLC, are purchasing the property directly through the LLC. You don't need to use us to purchase the property. We send the money to the LLC purchases the property. I have people that call me and say, I want to go down to the county courthouse and there's some houses that are going to be sold for auction, but I need the money today or tomorrow. How do I do that? The only real way to do that is through the LLC. The other advantage of the LLC is when you have to pay expenses. You have to go down to Home Depot to buy some new light bulbs. If it's in the IRA account, then technically the IRA needs to pay the light bulbs for that. You've got a debit card, you can go and pay those things. You mentioned, and I'll just reiterate this, you have to be as passive as a manager as you can, meaning you can be the manager of the LLC, you can find the property, you can manage the property, but don't do any day-to-day operations. Don't recarpet, don't repaint, don't pay for expenses with personal money. All of those things become a benefit that you're providing to the IRA and would become disqualified.
Okay. Um, Now, I mean, the checkbook control or the IRA LLC sounds like it might require a lot of expertise. But why? I mean, at the end of the day, that's why we're here. So why would someone choose AccuPlan to help them with one, investing in real estate through their retirement accounts, and then two, maybe choosing that extra product of the IRA LLC? Why would someone choose AccuPlan?
There are many different reasons why you would choose our company. First is from a pricing standpoint, we are very low. For an IRA account, we charge $350 per year, flat based fee. You can have as many assets as you want. We charge you $350. So our cost is going to be low. From an expertise, we've been in the business for over 20 years. I've been here over 20 years, 21, 22 years. So if you have a question, have a concern, I want to invest in this property. Can I do it? How do I stay compliant? How do I don't do something disqualified? We do provide that customer service, that support, that education. I will say I'm not an attorney. I'm not a CPA. So I'd always advise you tax questions, legal matters, contact them. But I can provide the education that you need. Since I've been doing this as long as I have, I know the answer to those questions, and I'll always put a caveat that says this is the answer. But if you want to know for sure, talk to your CPA, talk to your attorney. So we do provide that knowledge and that expertise, and we're a one-stop shop. We are a custodian. We set up the IRA accounts. We also set up LLCs. There are companies out there that are just a custodian. There are companies out there that just set up LLCs. We do both. So we're able to do everything for you, one location, and it's a fair, reasonable price as well.
Okay. And I'll throw something in there too with that, if you're slightly interested in maybe even switching up some of the investments rather than just having it all in, like you have that income coming in now because you have, let's say, your real estate property generating income, and you're like, well, I want to throw 5,000 to crypto, or I want to buy gold, $5,000 worth of gold. You can all do that very simply and easily with our site. So it's not only that, but then we have other options for you to invest that idle cash there if you want. But either way, yeah, like you said, we are very competitive with fees, and we have more than just about every other self-directed IRA company out there, we've got the time in, which over, like you said, you've been here over 20 years. That's how most of our team here at Accuplan is. I actually probably am one of the least tenured employees here, and I've been here 11 years. So that just goes to show you, we care about our employees here at Accuplan. That's why we're here for a long time. Conversely, we care about our clients, and we have the knowledge to help you out. So now is a great time. Actually, we can, well, actually, no, let me throw this. I'll say this. One of the downsides from me, which we've kind of hit, kind of haven't hit about real estate in an IRA, is I'm the type of person that would love to use, like, I would love to buy real estate as like a second home and be like, oh, yes, this is generating income and I'm going to use it as a second home occasionally. But everything you're saying here is saying that's probably not a thing you can do. Am I right?
Yeah, I don't recommend you using the house for primary use, primary benefit, because the IRS can argue that you're getting a benefit from your IRA and they could tax the entire transaction. This is going to
Okay.
be used for rental properties, for real estate, for property that you're not going to get a benefit of use on. Now, can you get a benefit in use later on? Yes. If you bought a property in Hawaii and you're going to rent it out for 10 years, then you want to go live in Hawaii after 10 years in that property, you can do so. We would just have to distribute the property to you. So you would no longer be, the IRA would no longer be owning it. You would then own the property. You would have to pay taxes on it at that point, but that is a possibility. So you can get a benefit in use. It's at retirement, and it's when we
Yeah.
distribute the asset to you. Prior to that, my recommendation is you do not use it for any personal use.
Yeah, I didn't think about that actually. You could basically use it as like your mandatory withdrawal,
Yes,
right? Like,
you
oh, if
could.
you have enough in there, you could withdraw the amount of the property, and now the property is yours. Interesting. Another question came in. Now's a good time for questions, I feel like. Are you familiar with a QRP? If so, do you guys handle those? Qualified retirement plan, I believe.
Yes. So, yes, the answer is we do qualified retirement plans. The whole qualified retirement plan is vague. Is a qualified retirement account an IRA? Is it a 401k? Is it a pension? Is it all of the above? So we handle pretty much any qualified retirement account, whether it's an IRA, traditional Roth, simple SEPs, whether it's a 401k. We do handle 401k accounts. We handle pension accounts. The difference with a 401k or a pension is if you had a current 401k with a current company and you wanted to buy real estate with us, you're going to need to check with your current 401k provider to see, one, do they allow you to do that? If not, two, do they allow you to roll money out while you're still employed? So if you're still employed, there can be some issues, restrictions on taking money out of your retirement account if it's a 401k. If you have an old 401k with an old company, no problem. We can do that every day. But if you work for a company with a 401k, we need to check and verify whether you can access those funds or not.
Okay. Yeah. And for anybody, if there's any very, very specific questions specifically pertaining to your situation that you're curious about, we love those questions. Even better, calling us at any time. I'll show Ben's contact information here. You can contact us at 801-683-9291. Ben is great at all of these questions. He can help you out. If you're not really one to want to use the phone, for sure, email him or contact our website.
And you can text that number as well.
Awesome. It looks like I might be glitching a little bit, but hopefully it'll catch up here. Now, jumping into if there's other questions, I'll say I have a couple questions here. One, pretty easy question, but is there a limit to the amount of homes you can buy? Could you buy 10 properties with your self-directed IRA? Are there any limits there?
No limits. Obviously, if you had $1 million and you bought 10 properties for $100,000, no problem. So there are no limitations there. Some of the questions I get asked is, can I get financing? Can I get a loan inside my IRA? The answer is yes. The IRA can get a loan. And if the IRA gets a loan, you've got to get what's called a non-recourse loan, which we won't go into a lot of detail, but there are financing options for IRA accounts. And I do have companies that will do loans to IRA accounts. Other question is, can I use my IRA as a down payment and can I finance the rest? The answer is yes. I would advise you to contact us to make sure that you do it properly, because we've talked about prohibited transactions, and this gets into an area where if not done properly, you can trigger a prohibited transaction. But it is possible to take $100,000 in your IRA, go buy a property for $1 million, and you finance 90% or $900,000 of the property. You would personally be owning 90% of the property. The IRA would be owning 10%. So you're able to partner with your IRA, but again, you need to do it properly within the rules and the guidelines that the IRS have put in place.
Yeah. I mean, that's probably the hardest part for most of us is how much money do we really have in our retirement accounts? Maybe not as much as we'd like. And if we don't have enough, how do we get or how do we buy real estate still? Is it possible? And like you said, yes, it is still possible. If you're curious about what a non-recourse loan is, reach out to us. If you're curious how you would go about, like Ben just mentioned, buying only 10% through your IRA and then the other 90 through your own funds, reach out to us. We will dive deep in those subjects. And we are always once a month doing these live calls. If you have questions at any time, check back on our YouTube account for past streams. Look out for emails for future streams. But I don't think I have any other questions or thoughts at the moment, Ben. I don't know if there's something you feel like we've missed so far today. I don't want it to take too long, too much of people's times. I think now is a good time to kind of end here, but do you have anything left, Benny?
Nope, nothing else I can think of. I mean, I think
Okay.
everything we've discussed and covered. I think for another topic, we could do non-recourse financing
Yeah.
and talk about taxes and stuff. There are some tax implications you need to be aware of as well, but definitely reach out if you have any questions. We'd love to discuss your needs and what you can do to help you.
Okay. Well, thanks, Ben, for diving deep into this world of real estate with us, specifically through your retirement accounts, your IRA, 401k, and then also talking a little bit about the advantages of checkbook control with that. At the end of the day, with the right approach, this can be a powerful strategy for building wealth in your retirement accounts. So thanks for being with us. Remember, we're here, Accuplan Benefit Services, to answer any questions, to help you out. Reach out to us to set up an account or to ask further questions. Visit our website at any time, accuplan.net. Thank you for joining us, everybody, and have a great day.
See you.